Welcome to another session of the My Solo 401k Financial YouTube webinar series. We're about to get started. All right, so I see we're just checking the audio. If you're on the YouTube channel, please like and subscribe. You can also post questions in the comments. And that sounds like the audio is working. Great. So today's session, we're just talking about the December 31st solo 401k establishment deadline. There's still time to meet the deadline and set up a plan in time to be able to preserve the right to make contributions for 2022 all the way up until your business tax return deadline, including any timely filed extension next year. So to meet the deadline, all you have to do is sign up with us, and that's it. You don't have to open the accounts, you don't have to make the contributions until next year. So we make it very easy. So we want to talk about the mechanics of that, answer any questions that are coming up this time of year. So please don't be shy. Go ahead and start chatting up the questions, but we'll start to lay the foundation and give you a chance to do that. One thing I also want to highlight before we jump into the content is that we do have our My Community website, which is at mysolo401k, mysolo401k.net/my community. So on that website, we host forums 24/7. We host webinars every day. So it's a great place to come, to learn, to share the knowledge. It's totally free to join. All are welcome. So let's get going. So the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So what do you need to do to meet the December 31st deadline? Well, you have to just take these 3 simple steps to sign up. You want to go to our website, mysolo401k.net, and click on Open Account. We've got a quick 1-minute application. You just submit that information, which gives us the information that we need to be able to draft the solo 401k documents specifically for your plan, make the payment. That'll put your plan in the queue for us to be able to prepare those documents the same day. So this time of year, we're turning those around same day. What will happen is we'll get an email right away to let you know that we got the application and payment. Then later that day, we will send you another email where you'll be able to access the solo 401k establishment documents on our secure portal. So all you have to do is download, sign, and you've met the deadline. You don't have to send them back to us. You don't have to open the accounts. You don't have to make the contributions. You don't have to get the EIN number. This is all you have to do to meet the deadline. So let me just chat over a link to our application. So if you do that, that'll give you the right to make contributions next year, both employee and employer, pre-tax, Roth, voluntary after tax, which is how one makes a Mega Backdoor Roth contribution. One of the top reasons that clients set up accounts with us. We help you open up accounts. All of this can occur next year. So the contribution limits for 2022 are the overall limits are $61,000 or even $67,500 if you're 50 or older. And to give you a little more detail, again, step 1, we're collecting the information that we need to draft the documents. But you can see it's just a quick 1-minute application, right? If you go to that link that I just sent over, scroll down, step 1, it's very self-explanatory information. We've got more explanation on the margin here. Just fill that out, click send. That gives us what we need, the information we need about you and your business to be able to draft the 401k documents for your business. So we're an IRS approved 401k plan provider. We have solo 401k documents, which we would use to create a 401k for your business. So a 401k, the way that I think about it is that it's a legal entity because it's really a trust. The assets are held in trust for future you when you retire, right? The assets that are in the 401k are not a business asset. It's not a personal asset that you can use unfettered without restriction right now, right? It's held in this trust account for future benefit. So to create the 401k, like any legal entity, it's the documents. So again, we draft those documents, we get them into our system same day so you can meet that deadline right away. All you need to do is download the documents to sign them. You can use electronic signature if you got your own electronic signature software. Obviously, you can print and use a pen. So by signing that, again, that's going to give you plenty of time to be able to make those 2022 contributions next year. So you can take your time to get the EIN number for the 401k, which we obtain as part of the onboarding process, to open up an account for the 401k, or it could be accounts, right? If you're going to make pre-tax and Roth contributions, you're going to need 2 accounts. Or if it's going to be you and your spouse that both work in the same business and both of you want to make pre-tax and Roth accounts, now we're up to 4 accounts. But as part of the onboarding process, we're going to ask you, okay, where do you want to have the accounts at? How many accounts do you want? Do you want to do a rollover? And then we're going to guide you through that process, including preparing the paperwork that's needed to open up accounts at the bank or brokerage of your choice. Take Schwab as a simple example. That's one of the most popular options. We've helped thousands of clients open up free brokerage accounts at Schwab. So we pre-fill all the paperwork that Schwab requires to open up the account. We put it out there on our secure portal. All you do is download it, you sign it, you upload it, we review and compile it, and then fax it to Schwab's back office. Then you get an email when it's open. But again, all of this can happen next year. You got plenty of time as long as you get signed up with us by the end of the year. You make those contributions, right? So the rules are different for self-employed individuals. You have more time, right? And we're going to talk a little bit about more of that in a couple slides. But just to really emphasize it, what you can do next year: return the documents, open the accounts, fund the plan by making contributions. Do I need to obtain an employer identification number by the end of the year? No, you don't. Again, all we're trying to do is establish a legal entity for your business. We're trying to establish a 401k trust. So it's all about the documents. You don't need to have an EIN number, right? You don't need to have a tax identification number for this entity to create it, right? You just have to have the documents. So we can get that EIN number next year. Do I need to have the account? No, because a 401k is a legal entity. So it's all about the documents, right? You'll need an account eventually when you're ready to fund it, right? You can't just keep that money in your personal account, for example. And we'll help you open up the account at the bank or brokerage of your choice when you're ready, in January, February, whenever you're ready to do that. So you don't have to make employee or employer contributions. All types of solo 401k contributions for 2022 can be made anytime next year up until the business tax return deadline, including any timely filed extension. And here's a snippet from IRS Publication 560, which is the landmark guidance for self-employed retirement plans like solo 401ks, which says that all you have to do is set up the plan by the end of the year, and then your last date for the contribution is going to be the due date of the tax return. Both elective deferrals, which are also known as employee contributions, as well as employer contributions. You got until, as it says here in black and white, the due date of the employer's return. That's you. If you're self-employed, you're the employer, including extensions. All you have to do is set up the plan. How do you set up the plan? It's the documents, because it's a legal entity. So if I adopt the plan now in December, how can I make contributions based on income that I earned in January of this year? Well, The industry best practice is that the effective date of that plan document, of that plan that's in the document, is going to be January 1st of 2022. So therefore, you're going to be able to make solo 401k contributions based on all and any self-employment income that you report for January for 2022. So even if you earned it in 2020 in January, if you report it for 2022 next year when you file your taxes, that'll be a basis for you to be able to make contributions to the plan. My CPA is advising me that I have to make the employee contribution by the end of the year. So this really highlights the difference between the rules that apply to 401k plans where you have non-owner employees, right? Like a 401k plan at a big corporation. Those salary deferrals by the employees have to be made by the end of the year. The employee contributions have to be made by the end of the year. But the rules are different for self-employed individuals. You have time to make the contribution because a lot of self-employed people, they may not know how much money they've made until after the end of the year. They might have a seasonal business where a lot of their income is earned in December. So they don't have time to figure out how much they're making and how much they're going to contribute to their 401k, right? Because the ability to contribute to the plan is based off of your self-employment income, right? You can't save more than you earn. So therefore, the IRS rule is logical that you're going to have more time to make that contribution once the dust is settled, once you know how much your self-employment compensation is, and therefore from that number you can determine how much you can contribute and how much you want to contribute, right? So hopefully that makes sense. So again, the deadline is going to be, as long as you get the plan set up, sign up with us by the end of the year, you have until that business tax return deadline, which we've got it here on this slide. For example, if you're a sole proprietor, then you report your income on the 1040. So really your business tax return deadline is your 1040 deadline. So that's April 17th or October 16th of next year. If you're taxed as a partnership or an S Corp, then you're looking at March 15th or September 15th of next year if you file a timely extension. Now, what happens if I don't open up the plan by the end of the year? Well, if you wait and don't open it up until next year, but still before your business tax return deadline, you're going to lose the ability to make employee contributions, but you could still make employer contributions, which is the profit sharing contribution. So that takes us to the end of the key facts or FAQs we wanted to go through. Again, stay in touch on the community, stay in touch on this YouTube channel. Please like and subscribe. We post videos every day on our YouTube channel, really clips from our daily webinars, some of the good questions we get and we want to share. So what are the limits for 2022 for a solo 401k? So we touched on the overall limit, right, which is 61,000 or 67,500. Of course, your ability to make contributions depends on different factors. One is your age. One is how your self-employed business is taxed, right? So for example, if your business is taxed as an S Corp, it's going to be based on the W-2 wages from your self-employed business taxed as an S Corp. Whereas if your business is taxed as a sole proprietorship, where you're reporting the self-employment income on Schedule C, then your ability to make solo 401k contributions is based off of self-employment compensation, which is really a pre-calculation of line 31 of Schedule C, less 1/2 of the self-employment tax. It also depends on what type of contribution you want to make. You're talking about employer, you're talking about employee, Mega Backdoor Roth, right? So we help our clients every day in terms of figuring out and educating them on those solo 401k contribution rules, whether it's the limits, how to make it, etc. We've also got a wealth of information on our website. So I'll chat over a link here because we have a series of webinars and slides that we posted that really deep dive the topic with different scenarios, all the different contribution limits, how to report on the taxes so you can really understand it. But the good news is, as long as you sign up at the end of the year, you'll have time, right? You'll buy yourself time to figure out, okay, how much can I contribute? How much do I want to contribute, right? So great question. Thanks for bringing the good question. What is the contribution company contribution due to be for 2022. So all types of solo 401k contributions are due by the business tax return deadline, including any timely filed extension, as long as the plan is set up by the end of the year. Thank you for bringing the good question. Please let me know if you have any follow-up questions. So next question here, I have a compliance question. At this time, if you search for my company details, all you will find is my company information, but not my personal information. By establishing a solo 401k account and hence a trust and associated brokerage accounts, am I exposing my personal information on the World Wide Web, or will only pull up the name of my trust without mine or my spouse's personal information? Great question. So that really highlights, like, we got to lay the foundation here about a solo 401k being an entity, but it's different than an entity like an LLC or a C Corp or an S Corp, where in most states you can go online and you can search for that entity and you can find information about who registered it, who's the registered agent. Whereas with this type of entity, a solo 401k, there's no publicly available database where anyone's going to be able to go and search, right? Even the 5,500 easy filings are not published online, as opposed to the big employer 5,500 plans. Like, you can search for Microsoft's 5,500. So the 5,500 is the annual informational tax return that has to be filed for a 401k. For a solo 401k, there's no annual filing if the value of the plan is less than 250,000. If it's more than 250, yes, there is, but it's not searchable in a public database like the big employer plan 5,500s are. So good question, but it's really, you're not going to, by setting up a solo 401k, your information is not going into a publicly available database or anything of that nature. Hopefully that helps. I know that the IRS limit is 20,500 and an additional 6,500 for the catch-up. How does the additional up to 61,000 get sent to the owner's account? So I think you're asking, how do you make additional contributions up to 61,000? Hopefully I'm understanding your question. So there's different ways, right? It could be an employer contribution. So let's assume that the individual they have a self-employed business tax as an S Corp. Let's assume that their W-2 wages are 100,000. Let's assume that they're over 50, like in your example. Let's assume that they don't make contributions to another plan, like a day job. So in this case, the person's going to be able to contribute 100% of their self-employment compensation, which is really the W-2 wages from their S Corp, as an employee contribution, all the way up to 27,000 for 2022, right? The $20,500 employee contribution plus the $6,500 catch-up. Now, this person could make an additional employer contribution equal to 25% of the W-2 wages, right? That would be a pre-tax contribution. So 25% of 100,000 is 25,000. So now this person has contributed 27 plus 25. If my math is right, that's 52, right? So this person cannot make any more employer, right? They've already hit the limit. It's 25%. They cannot make any more employee. They've already hit the limit. But if they set up a plan with a company like us that allows for a voluntary after-tax contribution, they could make an additional contribution equal to, if my math is right, 15,500, which would take them to a total contribution amount of 67,500. So the voluntary after-tax contribution limit is 100% dollar for dollar of the self-employment compensation. So it's not a percentage like the employer. So they could make that additional 15,500 into an after-tax account. So now they put in 27,000 as an employee. Let's assume that was pre-tax. They put in 25,000 as an employer, right? Which always go to pre-tax. So that's 52,000. My math is right. So they're going to be able to do another 15,500. That should take us up to 67,500 in total. That would have to go in, if they're going to do that after tax, it would have to go into a separate after tax account. and then they can move it from the after-tax account to a Roth solo 401k account. So at the end of the day, this person's made $52,000 in contributions as a pre-tax to reduce their taxable income, and then made another Mega Backdoor Roth contribution so that they have $15,500 in their Roth solo 401k. And then, of course, if you change the self-employment compensation, right, now you end up with, you could have different scenarios, different calculations. But hopefully that helps and kind of illustrates how the contribution rules depend on those different factors, like what type of contribution you're looking to make, etc. But again, the good news is all you have to do is sign up by the end of the year. That'll give you time to sort out, okay, what's my self-employment compensation? How much do I want to make, et cetera, et cetera. Does the employee deferral need to occur from payroll for the S Corp? Great question. No, it doesn't, right? Because remember, people, if you're self-employed, per IRS publication 560, you have time to make the contribution, right? You can make the contribution all the way up until the business tax return deadline, including any timely filed extension, as long as you set up the plan by the end of the year. Of course, payroll is paid by the end of the year, and S Corps are allowed to set up solo 401k plans. So the bottom line is, yes, you may pay through payroll, the salary deferral, but from a solo 401k perspective, you don't have to have it go through payroll. Now, if you're going to be making an employee contribution, an elective deferral, that's going to be reported on the W-2. So you'd want to coordinate with the W-2 provider so that they can report that correctly on the W-2, right? Whether it's a pre-tax, which is reducing box 1, or a Roth, which doesn't, of course, reduce box 1 because it's after tax, but it's still reported on that W-2. Hopefully that makes sense. Have a chicken and egg situation. I have a partnership and will not know my exact self-employment income until I file my taxes next year after taking out all the relevant expenses. Right, so once you know, you sign up the plan now, it gives you time before you file your taxes to figure out, okay, what's your self-employment compensation? Then make the contribution by the deadline. If you figure it out by March 15th, file an extension, well, that gives you until September 15th to make the contributions. Can I still plug in my employer pre-tax contribution information while I do my business taxes? Well, of course, as you're drafting your taxes, right, you could go through different scenarios and you can plug in numbers into the draft form. Hopefully I'm understanding and that makes sense. Thank you for all the good questions. We do appreciate it. Please, again, like and subscribe. There's still plenty of time, like I mentioned. As far as the cost, we charge a totally flat fee of $650, which includes the $525 establishment fee plus the first $125 annual fee. On the anniversary day, we email you an invoice so you can pay that $125 annual fee. Thank you for bringing the good question. Non-deductible IRA contribution of $6,000 made for 2022. Have existing pre-tax IRA, did Roth conversion of $6,000. Did not roll over pre-tax IRAs into a solo 401k before. So that's really a question for your tax advisor. Because essentially it sounds like you're trying to do a backdoor Roth IRA and you found out perhaps at this late hour that you had another IRA with pre-tax funds. Because obviously at this point it's going to be, it's not going to be possible to set up a new pre-tax solo 401k account and transfer funds from your pre-tax IRA to the pre-tax solo 401k. So you might end up owing taxes on some of that attempted backdoor Roth IRA. So definitely check with your tax advisor on that one. Thank you for bringing the good question though. Exactly, that's where the pro rata rule may come into play. If a spouse has a 401k through their separate employer and they max it out, does that have any effect on the solo 401k max contribution? No, you do not look at contributions made by your spouse for purposes of figuring out how much you can contribute to the solo 401k. So everything's analyzed on a per person basis. That participant's, that spouse's age, that spouse's self-employment compensation, whether that spouse made contributions to another plan, down the line. So the IRS, I would say the IRS rules are crystal clear, right? An S corp can set up a solo 401k plan. The contributions are not due until the business tax return deadline, including any timely filed extension. And this makes sense for a self-employed individual, that they would have time to make those contributions. It's also supported by the Secure Act, and there's a proposal even in the Secure Act 2.0 that is even consistent with this notion. Again, IRS publication 560, there's a chart on page 3. Yes, it's true. We showed you the receipts. IRS publication 560. What is the deadline to open the solo 401k for 2022? Now, it has to be done by December 31st. So it has to be done this week. Thank you for bringing all the great questions, everyone. We appreciate all the great questions. If a spouse has a 403b at a full-time job and the employer does a match, spouse is age 48 years, how does the contribution to the solo 401k affect? So normally contributions that are made to a plan that's sponsored by an unrelated employer, in other words, the individual might have a day job, might be self-employed with the solo 401k for their self-employed business, you ignore those employer contributions in determining how much can be contributed to the solo 401k. The exception to that is a 403b, the 403b exception. So you treat a 403b and the contributions made, whether by the employee or on the employee's behalf, like an employer contribution, and count it towards that solo 401k limit. So you've got to aggregate for purposes of determining whether or not you've hit the limit. Here's a link with more on this topic. Well, I have to wait on the 2022 tax returns to be completed to figure out the after-tax amount to be reported on Form 8606 regarding the backdoor Roth question. So that would be, I think we're still talking about the backdoor Roth IRA question. So I would definitely pose that to your tax advisor so they can look at the whole scenario. Thank you for bringing the good question. Both spouses are government employees contributing to a TSP plan. They're also part-time real estate agents. Are they able to establish and contribute to a solo 401k? And are they subject to aggregation? So if they have a separate self-employed business, each report their own self-employment activity on their taxes. For example, they each file a Schedule C. The fact that they are government employees contributing to a TSP will not prevent them from being able to set up a solo 401k. So the employee contribution limit is going to be aggregated. So if the employee maxes out their employee contributions to their day job plan, they're not going to be able to make any more employee contributions to the solo 401k. But the employer contribution limit, the voluntary after-tax contribution limit, is not reduced by contributions made to a day job plan unless that's a 403b day job plan. Thank you for bringing the good question. For the company contribution to the solo 401k, does the contribution just get transferred from the company account to the pre-tax trust account? Yes, or it doesn't have to, right? I mean, you could definitely it has to be transferred to the pre-tax, right? Whether it comes from the company or the business account, either is acceptable from a solo 401k perspective. We can't say that the employer contribution has to come from the business account. Based on feedback from clients and their tax advisors or accountants, a lot of them prefer that the employer contribution come from the employer account just for accounting purposes. But again, we can't sit here and say that it has to from a solo 401k perspective. So that takes us to the end of the questions that have been chatted up so far. Thank you so much for joining and all the good participation. We'll give you a chance to ask some more questions. Can I direct rollover pre-tax amounts to a pre-tax account at a new solo 401k and the after-tax amount to the after-tax account? So you can certainly transfer pre-tax money from an IRA to a pre-tax solo 401k. You certainly cannot transfer money that's after-tax money in an IRA or Roth money in a Roth IRA to any type of 401k. So hopefully that helps. Thank you for bringing the good question. How do we explain this to bankers while opening up the account? So I think it's helpful to understand, number one, that as long as you set up the plan with us by the end of the year, that'll lock in time for you to open up the accounts. We are neutral as far as where the accounts are set up. We have clients at hundreds of different banks, many different brokerages. It's important in our experience to use the right language, the correct, precise language that the banker will understand when trying to open up the account. Because a 401k is a trust, right? It's a retirement trust. So really, when a solo 401k owner is trying to open up an account for a bank, they're really acting as the trustee of a trust. So now when we use that language, that is language that the bankers typically understand, as opposed to going to a bank saying, I want to open up an account for my 401k to invest in real estate or crypto or something like that, that's going to really take the conversation sideways. So what we do is we recommend taking a methodical approach. So when the client's ready to open up the bank account, they go on our website, they let us know, hey, I want to open up a bank account. That triggers us to prepare a bank account packet that contains the information that 99% of the banks require to open up the account, so that the solo 401k owner can set up an account with their banker. It's better to take the methodical approach, set up an account, right? Forward the packet to the banker, then bring us on the phone if they have any questions. So from the bank's perspective, they're just opening up an account for a trust, right? They're not acting as the 401k provider. They're not handling 401k compliance support. These are things that we handle. So hopefully that helps. So what a lot of folks do is they just note in their file, right, that they have made an election to make a salary deferral, right? Again, it's clear under IRS publication 560 that the contribution itself doesn't have to be deposited until that business tax return deadline. Is there a particular order in which to do the direct rollover of pre-tax and the after-tax to the Roth? Does the one-time year rule apply? So again, I think we're talking about the backdoor Roth IRA scenario. So you certainly want to speak to your tax advisor on that one. Thank you. Thank you. Appreciate your participation. We can't give tax advice, and it's going to depend on the facts and circumstances. If I have an S corp with loss of 30,000, but my Schedule C has an earning of 30,000, can I contribute to solo 401k? So you have to aggregate based off of all types of earned self-employment compensation. So your S corp loss could be really an investment loss, right? So the purpose of a 401k is for workers to save for retirement. So a solo 401k is for self-employed individuals to save for retirement. Now, if one has multiple streams of self-employment income, those different streams are aggregated. Now, a lot of times it's positive streams. They're all positive. So you can use these different streams to justify contributions to the plan, additional contributions. Sometimes, though, it could be a negative stream and a positive stream, in which case you have to net out the negative, and then based off of the net amount, that's what you're able to contribute. Here, the threshold question though is, okay, is that loss really negative self-employment income, or is it really just negative investment income? So just like you can't use positive investment income to justify a contribution to a solo 401k, you don't have to reduce how your self-employment income by an investment loss before you figure out how much you can contribute to your solo 401k. So I would definitely want to dig into that more with your tax advisor. And again, as long as you set up the plan by the end of the year, you have time to figure that out. So we're open all the way up to Saturday. So we don't need to get the paperwork back in order to establish the plan. We're turning around applications same day, even on Saturday. So obviously, the clock is ticking. You never know. You might lose power or something on Saturday. So it'd probably be better just to get it taken care of now, sooner rather than later. But again, we'll be open all the way till December 31st, just to help folks meet the deadline. Okay, we'll give it a little another minute or so if there's any more questions come across. Again, we'll be back tomorrow in the community, same time, same place. You can also post questions on the community 24/7 in the forums. So it's a great way to learn and to share the knowledge. Please like and subscribe to the YouTube channel. We post videos every day on the YouTube channel, so it's a great way to stay in touch with what we're talking about in the community. Thank you so much for all the good participation. I really do appreciate it. So all the best, everyone. Happy holidays. Happy New Year. Looks like that's it. So thanks so much. Take care.